All right, yo, what's good, everybody? Um, all right, that was weird. All right, yeah, part two of our uh, visa video. Oh, okay, I knew I heard something. It's my wife yelling at my children to go to bed. It's 8:49 p.m. out here on the West Coast. So, part two of this video of Visa started a back test on Visa with the rolling fours and the mark strategy, and this is part two of the video. Didn't want to take too much time showing you guys every single trade that I was doing after we did some of our initial entries and a roll in the last video. So want to kind of just give you an update. I have two positions that are left over that are open on Visa, and so want to fill you guys in real quick on the trades that we did, but then also make some decisions on these final trades. The date that we left off um, in the last video was in October of 2018, and I've done quite a bit because now we're at February 2020, and we are pretty much right at the point of where COVID, Mike Tyson, the entire world, and uppercutted us with the coronavirus, and everything just started shutting down. So this is what Visa is looking like as of February 24th, 2020. But in the meantime, let me catch you guys up on the trades that I did and some of the exits, all right? So in the last video in part one, we had done, we finished by doing this 10/16/2018 trade on Visa. Since then, I've entered in and did a trade on January 2019, March 2019, August 2019, as well as December of 2019. These two here are the only two open positions. And we're pretty much same methodology of selecting everything, 2-year performance, putting that performance in the highest, lowest stock price, determining the strike price using Mark Monroe's calculator. Nothing has changed there on those days of selecting. And it was pretty interesting. But let me show you the exits of some of the trades. So obviously you guys saw us exit out of this trade and roll those options from the April and June. That was 24 contracts that we rolled over, and you didn't see these exits. So we saw the entry on September 9th, and that was September 9th, 2017. I exited that one on 7/2/2019 for $55.82. So bought it at $7.85, exited at 55, profit 28,000. That was a nice one right there. The December 2017, we exited that one in August 2019, August 1st, and we took a profit there of 19,000 with a 400% ROI. And then we had these interesting ones here, right? You saw these entries here. But we exited all these positions on August 2nd. So like the very next day, we exited these positions here. And I actually did a roll on the 5 contracts that we had, but I went ahead and did a full out exit from the 32 shares that we had initially rolled. So just to recap, we rolled 24 shares, and here's that entry of that roll. And then we, here's the exit from that roll, okay? And here's where I did 8 contracts on accident, and here's the exit from those 8 contracts. And on the prior one, on the March 2018 trade, I decided to roll this one. So it was 3 separate trades that we were exiting pretty much on the same day. I rolled one of them and just exited the other 2. That's what that represents there. So let's go to August 2nd, 2019 here on the chart, just so you guys can see what we're working with. So here was the time frame right here. So here's our time frame of August 2nd. Here's the 30th, 31st, August 1st, August 2nd. Not liking that break below the 20 EMA, looking like it was gonna tag the 50. So we exited on that day because in exiting, that candle was like down here. So it was like locking in profit. And when I was doing it, of course I didn't record it, but when I was doing it, when you see that ROI percentage just dropping, I'm sure individuals would have had like a 10% stop out, 10% trailing stop on their profits that would have exited them on that particular day. So that's why we exited on August 2nd and then decided to also roll just 5 of those contracts into a new position. And so that's what you see here. Straight exits on these ones, and this one re-rolled. And so we also entered in the meantime, we had entered already a January trade, we entered a March trade, and here's that roll on August 2nd of 2019. And on the last trade you guys saw in the part 1 video on October 16, 2018, we exited that one on January 31st, 2020. And we exited that one because that was another time frame where it was breaking, right? So if we go back to the chart, let's look at January 31st, 2020. We are right here. So we created some really nice highs, and then we had dipped down, and then we created some really nice highs again. And so this one was about locking in profit because it couldn't break that high, and it did bounce down. And of course, you guys can see we created a new high, which was great. But at the same time, again, with the ROI and what it was, like this thing was at 300%. So if you had some type of trailing stop on it from August 31st, not August 31st, from January 30th, 2020 to January 31st, 2020, this ROI dropped significantly. So it was one of those situations where it's like, all right, let's exit because we don't want to lose more of our profit. I know there was plenty of time for the expiration, 1 more plus year. But hey, if you're seeing other opportunities, right? You're seeing other things that are popping up that you may have wanted to enter into. But we went ahead and exited that. And that's still a good profit being in that trade for about a year and 2 months. And that looks pretty good. We also exited the January 2019 position because again, this ROI was a lot higher on the 30th. And then on the 31st, it dipped down significantly. So if you had a trailing stop, again, it would have exited you out. But that came with an even better ROI based on that position. And that was about a year into that trade. And then where did we leave off? We left off here, February 24th, COVID. So we had the January 25, not January, we had the March 2019 trade that we did. Expiration is January 2021, so still a year from now. Yet when you see that and your ROI is just dropping in percentage, I'm sure you'd be out. But I'm sure you'd be out when you see a candle like that has you worried. Even with a full position that doesn't expire for a year that you're looking to probably get out in June. I don't know, when you're going through it and the market's going through it and it's breaking, you're out. I think, at least. I could be wrong. So that's where we left off. That's where I left off after making the last video. So that's just to kind of catch you up. We're at February 25th. Now I still have 2 positions open. One from August 2019, the one that we rolled, 5 contracts that we rolled. And we have one from December 3rd of 5 contracts, just fresh new money put into the market on that one, right? So these two are still open. And so let's take a look at how they're doing right now. As of February 25th, they're at an ROI 57%. And this one right here is our August position. And this one right here is December. So here's August, December, 2019. So plenty of time left, especially for the December one, because it's 2022. So this is 2 years pretty much out. This one is the one we would be looking at and kind of being, okay, we have about 1 year and 4 months left in this one. And when I was looking at this made me want to make this second piece of the video just to kind of show the effects of like market drops and your profit and loss. So let's go to the chart and get this darn thing out of the way. That's making it, there you go. All right, so let's go to the chart and let's go out a month to where everything kind of start to be done with. But I want you to make note, take a look at the ROIs that we have here, 57% and 53%. And that's on February 24th, 57%, 53% on 2/24. Because we know where Visa is today. And I have a $200 position and a 215 strike, 200 strike and a 215 strike. And we know that Visa has hit 200 and 215, making today's video November 9th. That bad boy jumped up today, thanks to that vaccine. All right, let's bounce over 1 month out to March. I'm not gonna enter any more new positions here, but look at where it goes. No lie, if you were in this is where we exit that other one. Now we're gonna stay in the other ones because we're like, yeah, I got a heck of time. But I know you sitting there like, dang, 198 to 150. You're concerned, rightfully so. Where's our positions? Oh, now we're negative 50, negative 42%. Negative 50%, negative 42% on March 20th, 2020. So about 1 month later, you're up 57%. 1 month later, you're down 50%. And I know you're like, dang, what the F, right? Now, you got time, 455 days, 672 days. You got plenty of time. Really, on your January one, like you shouldn't really be sweating it at all, but we don't like to see losses. And we don't like to see losses when the market looks like it's just tank-orific, right? This is that Mike Tyson uppercut, knock you straight out, right? But let's move forward. And what I like us to pay attention to as we move forward, what the percentage of ROI we'd be at once we get back to like, you know, at least maybe this 193 range, or when we get back above these EMAs. So let's go into April when everything really starts to turn around. And I'm not going to enter in another trade here. And it's because we know what it did, right? You would be getting you'd be getting Visa at a really great price, way off the highs. We know you would have made buku dollars by August, coming back from here. So we're back above the 50 on 4.7. We bounced down. Let's see what our ROIs are now. Okay, so we're like, oh, okay, it's not so bad. Our position is minus 6% and minus 10%. And we're at 167. So On April 17th, we're minus 6%, minus 10% on the positions. And we're like 167. I don't even want to play with our emotions of what the trade would have been like if we like entered in here and then played it to August. It would just be stupid. Probably. Really be like, oh, that's so amazing. That's when we should have been in the market. Now you if you're a novice and new, you wouldn't have been. I mean, I wasn't. I was too busy working in the mortgage industry. So, all right. So we're negative 6%, negative 10%. Let's go out another month just to see what is happening to these returns. See what's happening to these ROIs. Right now, we're back above the 50. We're running into the 200 and the 100 simple moving averages, but we're above all our other averages. But it's like right here as a trader, right? Because I like to trade right here, I'm meeting resistance, and this looks like an ascending wedge, right? I have an uptrend. I'm pretty juiced about that uptrend. But then I also have, it looks like a ceiling. So on an ascending wedge here on this uptrend, right, hit the wall area. Of course, I'm gonna be breaking through this. That's what the pattern is showing. And of course, we know it did break through it, but that's what it's showing. So let's take a look at where we're at on our positions. So now we're at 19% and 15% of profit. And we're at what, 181. So we're about $18, $17 from where we were sitting at 57%. And now we're at 18% on that move back up. And I know this is something that's tough for us as investors or as traders, and I'm just being fully transparent because this is no knock to the methodology. It's no knock to Mark Come Up Series, Rolling Forest, no knock to Ian, no knock to EYL, no knock to anything. And it's just the stuff that we talk about though, right? There's an emotional factor in here. We could be upset feeling like, look, this thing has run up. Why am I not kind of like even closer to that 57 where I should be? And it's because when this thing drops, like there's an old adage that says, you know, stocks take the stairs up, but the elevator down. So when it drops, and that value of your premium just goes down, right? Exponentially, because that's what options do. They grow exponentially and they go down exponentially. You know, and prove me wrong. Tell me I'm wrong, right? There's all the deltas, and I understand that too. But just from what I've noticed, and it goes down and it goes down fast. And even when it's time to pick itself back up, it takes longer for your premium to really catch up to the momentum that it had, right? When it was rocking back here and just going up, 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 up. Right here, you took a significant dip and now it's working its way back up. And when you've entered in here, it's just going to take more time to get back to that area. Okay. So that's just a little something to share. It's kind of like a little bit of the struggle of something that I go through too, of seeing that and having to be patient. But we still have plenty of time, right? Because we're not even a year away from our expiration on one of our trades. All right, so went to the end of May, and as I mentioned, you had that ascending wedge, and there was a breakout there. Let me get rid of that image. Look, ascending wedge here, this line, this triangle. Boom, 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 and that breakout there. So now we're almost back at where we were February 24th, about there, almost there. Let's see what our RI is. And now we're at 61%. So now we're feeling a lot better. And at times, you know, these run-ups and these gap-ups, these things helped you. The momentum of those options helped you in it raising and getting back to its value that it was at. And at this moment in time, you're happy that you stayed in these two positions. And it's because you have pretty much a lot of time on your hands. But when you get these blows, it hurts a little bit. So wanted to share really kind of that with you, and didn't want to enter in a trade because obviously if we entered in one down here when we felt it bottomed out and we know that it hit 200 and 213 today, we know what that would be worth. Essentially, we'd probably be at 5x and 7x at that point in time. But now that we're back at kind of even, we're back up with the 61% and the 53%. So it's not all doom and gloom, right? There's still over a year left in these options. And when we see these dips, when we see these corrections, or even when it figures to enter into the bear market territory at a 20% drop, when you have time, don't panic. That's the message that I have for you in showing you this and kind of giving you an idea where those that ROI is and how that happens. Don't panic when you have time. All right, that's the message for you today. Do not panic when you have time. All right, so let's go ahead and exit out of these bad boys. Like I said, I'm not going to enter into any positions or anything like that. Let's go out a month. Let's just continue to go out a month. So let's go June and see what happens to the stock. I'm gonna throw my EMAs back on there. And we get rid of that line because we don't need it. Just drew that for illustration purposes. And let's get rid of this line because we didn't need that one either. Okay. So now we really reached our old position and then we dipped back down and then we came back up to 97%. Let's check in and see where our positions are at. Like, hold up, what? 40%? What happened here? Again, these drops take away, they take away stuff. Then it makes it a little bit harder to gain. So we were looking good here, went up, dropped, and now we're like almost back there, but we're not at 60% like we were just in 61% that we were in May. So let's punch out to July and see what the market and the pattern looks like in July. I'm gonna get rid of this. Somebody's blowing me up. Oop, that's my wife, probably like, come to bed. Remove drawing. Okay. So now we've teetered along. This is when our Visa was like flat basing at that 200, like, oh, can't get above it. Can't get above it. It's funny. I was watching it at this point in time, but I was like, I don't know if I should enter. All right. Let's look and see what our positions are at now. Still 30%. I know we're probably a little frustrated. Why? Because right here we were like at 60% because it did this nice run up. And then it ran up more, but then it dipped, and it ran up and it dipped, and up and it dipped, and up and it's dipping. So now it's just keeping us in that limbo spot, right? Let's go to August 21st. Wow, now we've finally broken 200. Now I said in my video, I'm gonna exit these positions in August. So I'm gonna do that. Let's take a look at what the position is. Now we're finally back at 58 and 55%. So check it out. You see that? 58, 55, and 58. We have so much time in both positions still that, of course, we'd really play this out and let it continue to ride, especially on this January 2022 call. Don't panic. You entered in December. You're not even a year into it. It's still going up and to the right for the most part. Let it be, let it ride. Same thing with the June 21 call. You got plenty of time. I'm going to turn this off because it's just buzzing right now. You got plenty of time. Let it ride, right? but we can't do that in back testing. It's still an up and to the right pattern. So in August 21st, if we were to exit these positions, which I'm going to do, it'll be at 58, 55. But what I want to do before I do that is just go to September and let's take a look at what it is, or what it was in September. So, you know, expiration Friday in September. We know what happened in September. So look, that bad boy went up, 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 up. 9.2 looked good, then came back down to the 203. 47%, 50%. Again, it's just an emotional roller coaster that you go through, but it is what it is. Let's take a look at it on 9.2. I'm going to exit this in August because I said I was going to, so I'm going to do that. But let's see what it did 9.2 when it hit an all-time high of 216. You're sitting at 113%. So 113% on 9.2. And then 2.5 weeks later, when it falls back down to 203, come on. Come on, internet connection. I don't got time. I'm only trying to make a short video here. Sorry, I'm just talking to myself. Oh, so we went from the 113% down to 47 or 50. So you lost roughly 50% going from the high down to the 203. But we stick to the script. We stick to the script. Even when this is your first time going through it and you have this much time left, kind of, you stick to the script. Oh, that thing is tweaking right there. Hang on, never mind of that. And it still hasn't fixed my chart. Let's go to October. Let's go to October, where everything fell apart at the end of the month. Let's see what it did. Oh, look at that. My, oh my. My, oh my. Down to 180. Yeah, that was something else right there. And what's this? Yeah, after good earnings too. Let's see where you're at. Negative 30%. Man, this thing takes you for an emotional roller coaster. But you stick to the script. And look, if you exited here, that's totally cool. It's your trade. It's your plan. It's what you would want to do. If you decided that it was like, all right, I've gone through this feeling here where I was up 57% and then I was down to 30% and I was just like, when is this thing going to break? And then it finally breaks and you see that it's above 100% and you're like, let me lock this in. And you're in tune with everything. And like, you're seeing the elections that obviously just occurred and you're like, you know, people talking about puts and stuff. It's like, all right, let me play this kind of safe here. And you exit it. That's fine. That's great. You locked in profit there, right? Because we were at 100% here on September 2nd. And when you're, I guess, even to an experienced trader, and you know September and October are, you know, historically the worst months, or knowing that they're trying to get Trump out to get Biden in, and you know S&P 500 is going to do its predictions of his performance, which was right. It was crazy. You know, you exit there, that's cool. But for those who wanted to stick in, don't worry, you still have time. That's the great thing. You still have plenty of time, right? Even now that you're back at a negative ROI, you still have time. So let's see here. And how far can I go? I can only go to Friday. And what a hell of a Friday. What a hell of a today, actually, which is November 9th. But based on Friday, Visa came back. It was at 199, right? Where does that put your position? back up 21% and 35%. Maybe I should have waited until tomorrow to do this video so we could see what it'd be now that now that it gapped up this morning on all that news to 215, right? Because here's Visa right now. This is today's candle. Crazy. So wanted to share this video with you. I'm gonna go back to August. I'm gonna exit out of these trades because that's what I said I was gonna do, so we can wrap up this back test. August 21st, it broke the 200 mark, and we're gonna exit there just to call it quits for this. And instead of entering in some trades throughout, the rest of 2020, after I did that, I was just looking at it. I was like, you know what, this is just a great discussion to look at, to see. These are kind of some of the things that you would want to look at when you're back testing. You're just things that, you can learn from to know what the movement will be, what it's going to look like, what it could look like. How would you feel when these things happen, right? Because as you can see, during this time frame, we were at a 57%. Then we came all the way down here and we're at negative 50%. And then we started bouncing up to April, we were at negative 6%. Then when we got here, we were back at like the 50 something and 60 something percent. And then we came up high and we down low, and we're at the 30%, and we're 30 and 30 and 30 and 30. And now when we get back here, we are at, come on, man. We're at 58 and 56%, right? At about 10 a.m. Pacific Standard Time. And then as we went into the future, when we broke the new high, we were at 100%. So you see how that bad boy fluctuates. And so that's why it's important for the long-term aspect to stick to this with. And I'm saying this to you guys out of faith because I haven't done these rolling fours. It's my first time I did it with XLK. And I'm going through it, watching it still be in the red, even though it went higher than my entry price. But after I bought, it dipped further. So I bought, it went down. My premium value went down. And then as it surpassed, it didn't put me back in profit mode because of the pricing and the market makers and what they do. And even with it going above it, now it's above the price in which I bought it, but it's still in the negative. But I have time. January 2023 is a long time from now. I just had a baby at the beginning of September. My child will be 1, probably 2 by the time I exit the trade. 1 or at least like 20 months old by the time I exit this trade. And that's crazy to think of because I'm an impatient person. So let's exit the trade, y'all. Let's just get out of here, and then I can go to bed and you guys can be like, all right, I'm done listening to this dude ramble. So let's exit this one. This is the one that we did. Let's see if there's actually positions to be able to exit. We're exiting the January expiration. It's like slightly in the money there. And there's volume on this day, so it's going to let us exit. So this is the June 21 trade, and all 5 that we get for 22.67. And then we're also going to see that lock those profits in. There's the trade, and we're going to exit this one. So yeah, not a lot of money. I know. Don't crucify me. Just know it's time to end the paper trade and back testing. So we're going to exit out this one. And this is January 2022. And we exit that, getting it at $20.95. So, and the stock price is about 204.15. So I'd love to take it further, but you know, you got to end it sometime. So we're going to enter this in 8/2/20. Stock price is at 204.15. We're going to get this premium at $22.67. We're going to get this premium at $20.95. Same thing. We don't need this last one because we didn't enter a trade. So this is with not even entering any trades in 2020. So let's take a look at our total amount invested. How many trades did we do? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades. 12 trades where we have invested our hard-earned money. Making notes here. 12 trades. Invested a total of $71,333 from April 2017 and exiting trades August 2020, a 3-year time span. But we really only entered trades for less than 2 years. So your hard-earned money is being invested, and even 2 of those being rolled into new positions. So you really weren't putting new money in. You've invested a total of $71,000 in these trades. And let's take a look and see what your profit is. So you profited $210,327. $210,327 is your profit. Pretty cool. 227, 71, 333 equals, is it that divided by your average return from your entire investment, 295%. Still pretty good, right? You're sitting pretty on a lot of these quarters and exits and profit taking, right? And that's cool. That's cool. This is why we're in it for the long haul. Averaging out this overall, when you can say, man, if you could tell somebody I've played Visa for X amount of time frame, average 295% return on every single on my trades. On the last 12 trades I did in Visa, I've averaged this. That speaks volume. And you can tell them too, obviously, some had 200%, some had 300%, 56%, 600%, 400%, 500% returns on some of these trades. That still speaks volumes to your ability and to what the rolling fours offers. Now, unlike the NVIDIA one, there's no losses in this one, which is pretty cool too. But it just still shows you that it works. It shows you that it works. And last thing I will say is looking at the chart too. What this has shared with me is, you know, picking obviously the right stock. I mean, they talked about picking the right stock. And let me remove my EMAs and stuff. And let me go out to a 5-year weekly. Because we started our trades here. And so this run up here is pretty significant. That's why those early trade profits were 600, 500% ROI. We hit some bumpy roads, and especially this year in 2020, you hit some bumpy roads, or even like the growth was not as significant here as it was, say, you know, during this time frame. But you do generally this is what was shared with me from some other stock trading teachers, is that you have a significant time frame of some uptrending and you have little rest periods. And good stocks have uptrends and rest periods. Uptrends, corrections, uptrends, little rest period, or whatever you want to call that, retracement, uptrends, corrections, flat basing, rest. We dropped, we had to climb back up the wall. We need a little bit of rest. And obviously we know that it's back over in this area too. Predicting some more. So the returns in the early aspect of it were definitely more significant because it was just constantly going up. And we had a few corrections, but then it really recovered very great. And then some of these last ones were a little bit tough, but who could have expected COVID-19 to hit? So wanted to share that with you guys. I'll complete my write-up that I'm doing on it. I'll share this Excel sheet, post on our Facebook Cousins page. But also, I'm sure if you're looking at this video, you're in the blog. Thank you for checking it out, reading it. Again, I appreciate the love of everybody just kind of enjoying the fact that I'm doing some of these back testing and sharing the results. Again, it's just to build my belief, also to be able to share concepts and with other individuals who maybe don't want to hop on and watch the come up series, but they'll come and take a look at the blog, and just trying to build also some of this to show some of my family and friends as well, so that they can see for themselves. If this worked in the past, it's a high probability that it can also work in the future when you pick the right good stocks and that they're consistently performing and going up and to the right. So appreciate you guys' time. Again, Robert Williams here. Check me out on Facebook, hit me up on Instagram, The Emotional Trader. Check out my blog, comment, subscribe, would appreciate it. And again, think, live, and be unstoppable. Talk to you guys later. Peace.